Welcome to The Explainer. We're diving straight into the modern Wild West of decentralized finance today. It's a space that's absolutely fascinating because it has this completely dual nature. On one hand, we are seeing truly unprecedented financial innovation and democratization. But on the other, it is an ecosystem that's literally packed with hidden traps, malicious actors, and these digital heists that happen in the blink of an eye. So, let's get right into it.
Really, this is the core question we have to ask ourselves today. What actually happens when anyone, anywhere, can create a brand new cryptocurrency in mere seconds? Just a few years ago, right, launching a token meant you needed a whole team of developers, a deep understanding of complex smart contracts, and months of prep work. And today, you literally just need a few clicks and a little bit of digital change. It's an entirely unprecedented level of accessibility for the crypto market.
Section 1. The token creation boom.
So platforms like Pump.fun totally flipped the script. They allowed creators with absolutely zero coding knowledge to launch tokens instantly. The barriers to entry weren't just lowered, they were completely wiped out. And you can see the sheer scale of this right away. 14 million. In just their first 2 years of operation, Pump.fun facilitated the launch of over 14 million tokens. Think about that volume for a second. That's millions of new ideas, communities, and schemes, just flooding the digital ecosystem at a rate that traditional finance can't even comprehend.
And the financial reality behind all that volume? Over $1 billion in revenue generated. This is definitely not just some niche hobbyist space. We're talking about a highly lucrative billion-dollar ecosystem here. The sheer amount of capital flowing through these permissionless token generators really proves that the demand for instant cryptocurrency creation is absolutely massive.
So what's the big pitch? The utopian promise of these platforms is captured perfectly right here. Launching a token is the fastest way to validate your idea, fund growth, and build a loyal community. It's basically the ultimate democratization of venture capital. Instead of pitching to a stuffy boardroom of investors, a creator gets instant exposure to hundreds of thousands of active retail investors worldwide. The market comes to you. Sounds pretty incredible, doesn't it?
Section 2. Anatomy of a rug pull.
All right, here's where we need to make a pretty sharp pivot. Because wherever there's easy money, there's inevitably deception. We've got to drop the floor out from under the hype and dive into the dark reality of crypto scams. A crucial concept to understand exactly is the rug pull. Simply put, a rug pull is the deliberate and sudden removal of all funds raised from traders by the creators of a new token. Basically, scammers spin up a token, hype it up, get everyday traders to pour their money into the liquidity pool, and then boom, without any warning, they pull all that underlying value out. And the traders, they're left holding entirely worthless tokens.
Now, if you're thinking this is just a rare, unlucky occurrence, brace yourself for this. Academic research analyzing the Uniswap V2 decentralized exchange revealed that a staggering 97% of tokens on the platform were malicious. Yeah, 97%. This is not just a few bad apples. It's a systemic issue where the vast majority of newly created assets in these open pools were literally designed from the ground up to deceive you.
Section 3. Hunting scams with data.
So how exactly do we fight back? Well, we've got to shift into an investigative mindset. Data scientists and academic researchers are actually using machine learning to analyze the massive amounts of transparent on-chain data to predict and flag these scams before the trap closes. In a recent snapshot from a Science Direct research paper analyzing 7,450 tokens on Uniswap V3, what jumps out immediately is that well over half of these tokens, 4,086 of them, are completely inactive. They were created, maybe traded briefly, and then just died. To find the scams, data scientists have to dig really deep into this massive chunk of inactive digital graveyards. When you break down those inactive tokens, it paints a pretty grim picture. You can see that 581 of these tokens were mathematically confirmed as rug pulls. Researchers figured this out by tracking the maximum price drawdown. They were essentially looking for tokens where the liquidity just abruptly dropped to zero with absolutely zero price recovery. It is literally the mathematical footprint of a digital heist.
Section 4. Spotting the red flags.
The tricky thing is, the smart contracts themselves usually look perfectly normal, so just analyzing the code isn't enough. Rug pulls are fundamentally social engineering scams. They trick humans, not computers. So to catch them, we have to look at behavioral and time series data. Let's compare the two approaches. For legitimate founders, you see them following recommended best practices, things platforms actively encourage. Real developers lock up 20 to 50% of their token supply to prove they're committed long-term, and they maintain consistent, transparent communication. But scammers? They do the exact opposite.
They leave their tokens unlocked so they can make a quick exit, and they heavily rely on sudden, manipulative marketing to just spike the volume. To back this up, a thematic analysis from Cambridge University found exactly that. They noted that these schemes primarily use authoritative and financial lures at the announcement stage to mimic legitimate projects. They come in making grand promises, touting fake partnerships, and guaranteeing massive financial returns right out of the gate. They are absolutely playing on the psychology of FOMO, the fear of missing out.
Section 5. The need for speed.
Because scammers manipulate our emotions to drive fast investments, the window to catch them is incredibly tight. Data models, like the XGBoost machine learning algorithm that researchers use, rely on time series data to predict a scam before the rug is actually pulled. And the data shows this critical window is remarkably fast. Researchers found that their models are most accurate when analyzing data starting at about 8 hours and peaking around 20 hours after the token is created. Honestly, if you wait days or weeks to analyze a token, it's already way too late. The heist has already happened.
So, what exactly is the artificial intelligence looking at during those crucial hours? When running the machine learning model, the biggest red flags predicting a scam are: number 1, the maximum volume in USD, number 2, the time it takes to hit that maximum volume, and number 3, the total number of active token holders.
The psychology behind these data points is absolutely crucial here. Think about it. Scammers want quick cash. They are definitely not going to risk spending an extended period of time slowly and organically raising a token's price. If a token goes from zero to massive trading volume in just a few hours, the algorithm flags it. Simply put, the faster a token hits its maximum volume, the significantly higher the risk that it's a rug pull. Okay, let's pull all of this together into some actual, actionable takeaways for you. If you are navigating this space, here is your data-backed checklist of red flags. Watch out for a remarkably rapid time to maximum volume. Look for unlocked founder token supplies. Be extremely wary of sudden, extreme price spikes within the first 24 hours, especially if the number of active holders is actively dropping. And finally, beware of those massive financial lures that don't have any verifiable public communication backing them up.
We are living in an incredible era for digital finance. The barriers are gone, the traditional gatekeepers are removed, and the potential for innovation is pretty much boundless. But, as the data so clearly shows us, this kind of freedom comes with unprecedented risk. So I want to leave you with this final thought to ponder. In a world where anyone, anywhere can launch a token in seconds, who are you really trusting? Thanks for joining me on this explainer, and definitely keep your eyes wide open out there.